Okay, so we're at our place in the journey now where it's time to talk about actually receiving and negotiating offers. I find a lot of sellers are just not really well equipped for this before they get to that point. So here's your opportunity just to kind of understand some of these things. There's multiple elements that make up an offer to purchase. It's not just what dollar figure the person offers on a property. There's things like the inspection period length, the earnest money deposit amount, the down payment amount. So today, what I want to look at is specifically finance type. And specifically, when you're going into this part of your journey where you're starting to receive offers, where finance type is concerned, you want to ask yourself two questions. Number one, how fast do you need to get to your next place? Are there factors in your life that are requiring you to be in your next place or sell your house and be in the next house by a certain point? If so, you want to know that before you just accept the highest offer. And then secondly is how negatively impactful would it be if the offer that you receive falls through? If the buyer gets denied ultimately by their lender or what have you. If that's a critical piece, then you need to know that before you accept an offer, or else you could really be in a problematic situation. And finance type is something to look at with regards to these two questions. So the main finance type in my experience, in my career in real estate in Southeast Michigan, and probably would be the case for most areas, would be FHA, VA. In Michigan, you've got MSHDA, which isn't a finance type, but I'll explain that in a little bit. Conventional loans, and then fifthly would be cash, which of course we all know is king. FHA, let's dig into that a little bit. So FHA, Federal Housing Administration, that is a government-backed or insured by the FHA for higher risk buyers who usually can't necessarily afford a down payment. So it's a low down payment deal, and lower credit scores are accepted. Now, the thing with FHA is that there's more red tape involved in the underwriting process, meaning that it's typically going to be 30 to 45 days from the point of accepting the offer before you can actually close. So you need to know that. Is that going to be okay? But also know that there's a higher likelihood that the buyer is higher risk. And then you also want to know, as far as FHA, is that FHA has their own additional inspection that they do. And a FHA appraiser comes out to evaluate the property, but to also look at the safety, especially of the property. Are all the major systems, the roof, the plumbing, the electrical, are all those in really solid condition? If not, that's going to be a requirement to be addressed. Are there things like cracks in the driveway that would be a tripping hazard? Is there chipped paint in an older built house that could represent lead-based paint exposure? Are there the screen windows kind of peeling to where people could get lead poisoning if they scratch themselves on it? These little things, and it definitely usually is little things, are going to be picked up and required to be addressed prior to close. VA, there's kind of a stigma with VA for some reason. They do take longer. They can take as many as 60 days. So it's usually 45 to 60 days before you can close on a VA loan. However, they're not necessarily a problem in terms of getting approved. So I would not shy away from a VA loan if you're okay waiting for that longer period of time. Similar to that would be MSHDA. MSHDA is a program that grants, in the state of Michigan, monies to the buyer, first-time home buyers, to help towards their down payment and closing costs, usually $7,500. The thing about MSHDA, it's great to get the buyer able to buy a house. The negative thing is there's a whole second set of approvals that have to take place for the deal to close. MSHDA themselves have to approve the deal on top of the lender approving the deal. You just need to know you need to tag on another 10 to 15 days beyond what would be normal for the MSHDA process to take place. Conventional loans would be the kind of creme de la creme. That's usually a more qualified buyer, lower risk, especially if they're bigger down payment, and usually takes around 30 days, higher likelihood of approval. You generally want to deal with a conventional loan. That's the best, and absolute best, of course, would be cash. Why is cash king in real estate? Well, one thing is because there is no underwriter. There's no bank that needs to approve the loan. The buyer themselves are their own bank. So it's way quicker for that in that sense. The thing is that there's no appraisal. Again, the buyer themselves are their own appraiser. So you don't have to worry about the lender denying it. You don't have to worry about the house not appraising, and it's way quicker because it's liquid. The cash is right there. So cash is definitely king and easiest. If you have any questions, or if you're looking to sell, if you know anyone in Southeast Michigan looking to sell, have them reach out to me. I'd be happy to serve them. I only work through referrals and word of mouth. So that's my bread and butter. I appreciate all the referrals that you're sending me, and look forward to helping out next time.